Nigeria records 1.4 trillion naira trade deficit in Q4 2023. And aside that, we'll also be considering the budget padding allegation leveled against the Nigerian Senate president, while also stopping over in Zimbabwe as we have U.S. sanctions on the Southern African nation's president amid debt restructuring talks. This is Business Edge. I am Lekon Obanjo. Let's start off with top business headlines from across the continent. Aisha Dahir Umar, the Director General of the National Pension Commission, refutes claims that the Commission loaned 10 trillion naira to the federal government of Nigeria. The House of Representatives had instructed its Committee on Pensions to recover the alleged funds in October. Dahir Umar clarifies that PENCOM is not a bank and doesn't manage pension funds, emphasizing that the federal government did not borrow 10 trillion naira from the Commission. She asserts that investment in pension fund administrators in government securities are not loans, but approved investments traded on authorized markets. Dahir Umar underscores the pension fund assets amounting to 19.6 trillion naira, which are managed by licensed PFAs and held in pension fund custodians in accordance with pension laws. And away from that, Egypt is making substantial strides in reducing its budget deficit through strategic initiatives, including a $24 billion deal selling development rights to Ras Al Hikmah and securing a $20 billion support package from the International Monetary Fund. The Finance Minister, Mohamed Mait, anticipates the primary budget surpluses exceeding 3.5% in the upcoming fiscal year starting July. The Ras Al Hikmah transaction and the IMF package, featuring $3 billion from the World Bank, contributes significantly to the country's economy. Despite challenges like declining revenue from the Suez Canal and increased expenditures due to currency devaluation and higher interest rates, Egypt remains committed to fiscal discipline, including further state asset sales and maintaining debt below 90% of gross domestic products. And also, Ethiopia is on the brink of launching its first securities exchange in Q3 2024, marking a significant development in its $156 billion economy. The Ethiopia Capital Markets Authority, with a 14-month head start, emphasizes a non-restrictive regulatory environment to encourage company listings. Key infrastructure, including a central securities depository platform, is near completion, and Ethiopia's late entry into the market aims to learn from global successes. Notable offerings on the horizon include the listing of Ethio Telecom's 10% stake. While facing challenges such as a declining IPO trend in Africa, Ethiopia focuses on creating an alternative and attractive alternative to transactional and traditional banking borrowing in its emerging capital markets landscape. And that's it on African business stories. We're now going to break to bring you market updates. Nigeria's stock markets closed the week up 2.61%, boosted by buying in newly listed Transcorp Power and MTN Nigeria. The index ASI rose to 101,330.88 points, extending its year-to-date gains to 35.52%. So at this point, we quickly take a look at the numbers. We start by looking at the all-share index. That's about the figures there, 101,330.85, and it shows a positive change rather of about plus 2.61%. Let's quickly look at market capitalization. And here we see a 57.29 trillion naira market cap, showing that there's a bit of confidence on the part of the investors in terms of capitalization for the Nigerian bourse, with a plus of 6.03%. We now look at the top 5 gainers for last week. And there we have Transpower topping the chart with 351 naira 30 kobo, followed by Julie PLC, which seems to have gained a bit. That's just about 4 naira 97 kobo in closing, with Intel Energy closing at about 1 naira 68 kobo. Transcorp, PZ Cousins Industry hovering around the bottom two with 17 naira and 14 naira. We now look at the top 5 losers for the week. That is Guinness PLC closing rather at about 42 naira 05 kobo, followed by EcoBank closing at about 20 naira, NEM Insurance, FTN Cocoa Chams closing at about 5 naira 50 kobo, 1 naira 38 kobo, and 2 naira. And you see the percentage difference there in terms of the deficit. We now quickly look at the sectoral performance. As usual, top in the charts is the banking industry, but then with a deficit of minus 1.40%. Insurance follows with minus 5.22%, followed by oil and gas, which is just about bland right there. And consumer goods, industrial goods also concluding the list with minus 1.21% and plus 1.59%. And that's about it looking at the market performance. We now go on a short break to look at our first conversation for the day. Do stay with us. Nigeria's economic landscape is currently a mixed bag. While recent developments are suggesting a positive trajectory, some underlying challenges seem to persist. And on the bright side, Nigeria's external reserves have exhibited a promising trend. And according to data from the Central Bank of Nigeria, the reserves have grown by 2.83% year to date, reaching $34.11 billion as of March 7, 2024. However, a recent report from the National Bureau of Statistics paints a different picture. The NBS reported a trade deficit of 1.4 trillion naira in the fourth quarter of 2023, and this suggests that the value of Nigeria's imports exceeded its exports during that period, raising concerns about potential current account imbalances and pressure on the naira. This morning, we are joined by Ayodeji Ebo, MD, Chief Business Officer. That is Ayodeji Ebo, who is the Managing Director and Chief Business Officer, Optimus by Afri Invest. Thank you so much for joining us on the show.
Yeah, good morning, and it's great to be here.
Okay, so I'd like to find out from you, isn't it concerning that amid a fallen naira, the country also recorded a trade deficit of about 1.4 trillion naira in the fourth quarter of 2023?
Okay, yeah, thanks. It's all concerning for everyone with the continuous depreciation of the naira. Yes, in the last 1 week, there's been a bit of stability. But speaking to the data, if you look at the fourth quarter of last year, you would see, based on what you have said, the trade deficit of about 1.4 trillion. And one of the major reasons that's responsible for this is that we observed that there was significant increase in importation of vehicles, airplanes, and machineries within that period. When you check it on a quarter-on-quarter basis, was almost like about 60-70% increase. So when you look at the export, we export more of crude, and then mostly our oil production stayed at an average of 1.35 million barrels per day within that quarter. So that did not increase the export leg that should have compensated for the major increase that we observed in the import of machineries, motor vehicles, and airplanes.
But then if we look at quarter 3 of 2023, Nigeria had a trade surplus of 1.8 trillion naira, meaning that the value of the country's exports, which was about 10.35 trillion naira, was higher than import of about 9.04 trillion naira. But then, just as you said, we look at quarter 4 2023, the trajectory changed, with Nigeria's trade recording a deficit as the value of imports outweighed exports. So what other factors would you consider as responsible for this that you think we need to be looking at as we move forward?
Okay, thanks. So I think that when you look at import-export, when we have trade surplus, it means that we export more than we import. And when you look at the ratio in Q3 2024, we had a ratio of export was 53%, while import was 47% of total trades. However, it flipped around in Q4, where we had imports was about 53% and export was about 47%. And that was responsible for the negative or the deficit, trade deficit that we had. The major reason I would reemphasize is that oil production that boosted, it was oil production that improved the earnings we had in our exports. Beyond the devaluation that increased our naira revenue from or naira value of export, the oil production improved in that Q3 from an average of almost 1.15, 1.2 to an average of 1.35 million barrels per day. However, in Q4, within that period, oil production stayed at that current level of 1.35 million barrels per day. But it was interesting to see that there was a major surge in the imports of motor vehicles, airplanes, and machineries into the country within that period, which means that that would have been responsible for a lot of the FX demand that we also observed within that quarter, apart from oil. So it was really a major need because looking at the data, looking at it in the past 4 or 5 quarters, that Q4 quarter was really very massive and it stood out significantly beyond the imports. You know, when you look at oil and oil products, still accounts for import of oil and oil products, still accounts for about 90% of total imports in Nigeria, then followed by manufacturing, then you also look at agri. So it's that there's a need to see that we continue to improve our export, which is the oil production. If that can go up, to also have impact even on our external reserves.
But then if we continue to say that we may need to keep putting our thoughts or our willingness to continue to export crude oil, of course, for decades we have had talks about the Nigerian economy being over-reliant on crude oil exports and the need to diversify. And there have been talks about diversification of the Nigerian economy because there are other sectors of the economy that are said to be performing well only if more investments can be channeled towards that line. They might just be able to improve on the Nigerian economy and value, so to speak. So what are the areas, if we are to look away from crude oil now, what are the other areas that you feel Nigeria would need improvements if we are to increase the value of our exports?
Okay, thank you very much. So the first thing is, when you look at agric, which is the second largest, which is about 3.9% on a quarter-on-quarter basis, that also needs to be worked on. And when you look at what are the major items, sesame seeds, cocoa beans, and soya beans, they account for about 2.9% of total exports, which is about 372 billion. This, I feel, is also like a quick win for the government to work on, to expand. So if we can grow in this quantity here and we can export it, why don't we invest more money in this space like we invest in oil to expand this through improved seedlings, support with fertilizers, more training, so that we can export, and also improving that process of export. It's also very important. The second largest or the third largest item is manufacturing products. We know, yes, we will not be able to produce a lot of very sophisticated products within the country, but it's also good to look at, even if it's the repairs that we begin to also build ourselves in. Then I think it's also interesting to note that Nigerians spent about 5.4 billion naira on importation of salt for human consumption from Namibia in Q4 2023. So you now wonder, is it that we can't produce salt in sufficient quantity that we had to import it? This is just for 1 quarter. So by the time you analyze that, that's almost 20 billion naira we are spending on salt. Okay. That I feel we have enough in Nigeria. So these are some of the things that, if we identify this, what are the things Nigerians are spending money on? Granite from China was about 1.5 billion in last quarter. So those are some of the things. Is it that we can't produce them enough? And if we can't, can we channel more effort in improving this such that we'll be able to create more jobs, because what we are doing is we are creating jobs abroad and we are suffering it here. And that is also impacting on insecurity. So there's a need for us to focus on these quick wins.
Okay, let's also look at this. Nigeria's external reserves recorded 2.83% year-to-date accretion following inflows from foreign capital and remittances. So, considering the fact that it's just about 2 weeks, or 2 months rather, annual week, do you think that is good enough?
No, I think the CBN don't have full control of what the external reserves is being managed by the CBN. But where the fiscal authorities, the role they play is the ability to be able to bring funding into the reserves. So what the average, it's always like a 6-month average when you see the numbers that you see. And that's why if there's any major increase, you don't see that impact until after a while. So I feel that, yes, there's an improvement. That means with all the increase in volume in the NAFEM market, that's the Nigerian foreign exchange market, it means that inflow has improved, and we can trace that to improvement in oil production, which has increased to about 1.4 million barrels per day. Yes, so as of January. So if that can be sustained, and we ramp up our production back to the levels of 1.6, 1.7 million barrels per day, that creates steady FX while we continue to work on foreign portfolio investments or foreign direct investment into the country. And we believe that as a result of that, there will be improvements in liquidity and it will create stability, which will complement some of the current or new policies that the government have introduced around the year.
So then let's quickly recall JP Morgan's shock review, which puts Nigeria's FX reserves at about $3 billion. But then we hear the CBN insisting that it's not the case. So looking at the activities in the market and CBN's intervention so far, does it seem to you that it has up to what it claims to have? Or should we, let me put it this way, does Nigeria have enough reserve to support the Naira?
Okay, thank you. Yes, we may not have, I think the reserves is encumbered, which means that, yes, the value of the $34 billion, there may be some of it that is encumbered, which is also constraining the CBN with the intervention. So I don't believe that all the current amount is totally unencumbered, because that would have also increased the level of the intervention we'll be getting from the CBN. But I don't want to put this blame on the CBN. CBN is serving like the portfolio managers. So it's the fiscal authority has a major role to also play to complement the efforts of the CBN, which is through reducing oil theft and increasing production. And once we can increase oil production, and we also raise more euro bonds, and over time, with some of these policies, the new policies that have been introduced, will create a bit of more stability. And once the foreign investors see stability, consistency in our policies, then I believe that would also create a lot of more inflow and appreciation of the Naira in the medium to long term.
Cool. Iboyodeji, MD, Chief Business Officer, Optimus by AfriInvest. Thank you so much for sharing your thoughts with us.
Thanks for having me.
So when we're going to break and return, we'll look at the allegation leveled against the Nigerian Senate President of the pardon of the 2024 budget. To stay with us. Northern senators under the aegis of Northern Senators Forum have reportedly confronted the Senate President, Godswill Akpabio, over alleged pardon of the 2024 budget with about 3 trillion naira worth of projects. Representatives of the 58-member forum, led by its chairman, Abdul Ningi, alleged the projects, which had no locations, were discreetly inserted into the budget. This is as the House of Representatives has called for a review of the 2024 budget projections owing to the free fall of the Naira in the past few months. So you would recall that the Senate passed the 2024 budget of 28.7 trillion Naira on December 30, 2023, after it was increased by 1.27 trillion Naira. At this point, Kikelom Shodeko, risk consultant, joins me to discuss this. Thank you so much for joining us on the show. Okay, at this point, let's see if we can bring our other guests to talk about this. that is Liberal Soshoma, while we try to reestablish connection with Kikelomo. Liberal Soshoma, it was nice. It's nice having you around.
My pleasure.
So, of course, you understand this is not the first time that the Nigerian legislative arm would be accused of budget padding. And this was as a budget that was increased by 1.27 trillion naira and okayed by the legislative members was, of course, put forward. So, does this imply that due diligence wasn't carried out, despite the level of sensitivity and the impact it would have on the economy?
Yeah, first and foremost, let us understand the padding referred to here, or the accusation. The senator is accusing the federal government of inserting about 3-point-something billion on the budget passed. The senator alleged that the budget passed was a budget of 25 trillion. And so I am at a loss where the senator got his figure of 25 trillion from. And even in your intro, you did say that the budget passed was a budget of 28.7 trillion. The budget initially submitted was a budget of 27.5 trillion. And then the Senate added about 1.1 trillion to that budget, and it came to 28.7 trillion. And so I do not know where the senator got his figures from, because if you look at the news, really, on the 30th of December 2023, it was widely reported. Nairametrics reported it, the Cable reported it, Reuters reported it also, that the Senate, the two houses of the Nigerian Senate, of the National Assembly, passed a budget of 28.7 trillion, that is about $34 billion, which, was increased from 27.5 to 28.7 by the Senate. There was even accusation also, if you permit me, that the Senate also increased its budget, an all-time high of 74.23%, from 197.9 billion to 344.85 billion naira. All of these were in the news. So I really do not know where that senator got his figures of 25 billion from, and that the budget was then increased from 25 billion to 28 billion. So that said,
does that mean that there was a miscalculation in what the senator representing northern senators, what he presented? Because one would have thought about what could have informed such an allegation being tabled or leveled against the Senate presidents.
That's why I'm at a loss that a senator would sit down and in the interview, I think BBC Hausa Service interview, he alleged that what was passed was 25 billion, was a budget of 25 billion. And it is a notorious fact, these figures are not hidden. It's a notorious fact that what was passed was a budget of 28.7. And so, and I expected that for a senator, a high-ranking senator, for that matter, to grant such an interview, he ought to have cross-checked his fact. If he's saying that the 28.7 billion, that the 3 billion had been added to it, then that is a different discussion altogether. And I also will think that this should not just end in the realm of accusation. You should, before you make such accusation, I think as a senator, a senator should confront the public with facts and figures to state clearly that, oh, yes, the budget that was passed, but that what is being implemented, that there is a project inserted that would, that surreptitiously, or that is alleged to be implemented or carried out in so and so area, and the amount of that project will be so and so, or that such money or some funds that have been expended, that have been paid out by the federal government, for example, were not captured in the budget.
Okay, and
this.
Yeah, Liberals, just permit me a few minutes. I need to bring in Kikelomo Shodeko to get a reaction on this also. We're looking at a Senate member saying that 25 trillion, not billion, was the actual budget size before it was eventually padded, according to his allegation, to 28 trillion, leaving a deficit of about 3 trillion naira. What's your take on that? You heard what Liberals said. Are you also amidst as regards what is being presented?
Yeah, I hear what he's saying loud and clear. He's very correct in the sense of before you make allegations, you have to do your findings, right? And I'm a very big proponent of being an intelligence consultant, because part of what you do before you come out, before you can make that kind of allegation, is you have to have the proper information so that you do not disseminate the wrong information. Now, I can say clearly that budget padding, like we've come to call it in Nigeria, is not new, right? It's been said by some articles or some written published articles that it's a new word in our dictionary, and it came to be when the APC came into government in 2016, right? So that's on a political note, right? But budget padding, the idea that the president presents a budget and the Senate and the House of Reps deems it fit to add something extra to it without the knowledge of the president, without the knowledge of the people that elected them into space, is not uncommon in the Nigerian sphere. Sadly, that is the reality. And for me, what is important is that first and foremost, because they know that Nigerians are generally not inclined to be interested in things like this. It's only a very few Nigerians that maybe have contracts and projects that have to do with government that really care about these things. But on the average, the populace don't really care about what is passed in the budget. And maybe on one or two occasions, we have like a discussion on some social media where people talk about it. But apart from that, we don't follow up. And the Senate and the House of Rep have done the Nigerian people a lot of disservice in the sense that they do not respect the people. And all these allegations, nobody does any investigation to find who did what where, right? All they do is they give the media a bone to chew, throw it in the media, let the media chew on it, write articles on it, let people read about it and make a whole lot of noise about it. And after a while, they pass, it's signed, and that's it, right? So for me, on the first part, just like my colleague has spoken, is that proper investigation needs to be done. You need to get your information right before you call the media and start alleging that something has been done. On the second part, this is not a new thing. The Senate and the House of Rep are used to doing this. They mostly just give us extra where there is no extra. And as we remember, the House of Rep came and told us that, they infused the 1 million for capital expenditure that would help the assets and things like that. So it's not a new thing. I will say that again. But at the same time, if there's going to be an allegation, let it be factual. Thank you.
Okay, so that is it for me, a liberal. So when we say it's a ritual, it's a thing that is always being done, and we see that this is something that nobody gets to check. For liberals, what do you think in this case must be done? Because we're looking at how it will impact the overall expenditure, it would impact the Nigerian economy, it will impact implementation and the overall benefits or dividends that the Nigerian masses should enjoy. So what do you think at this point should be done, whether or not the facts or the figures are right, to ensure that there's accountability and transparency in what is being presented by the National Assembly and has been eventually ratified by the president?
First and foremost, I do not discuss rumors for the fact that it's coming from a senator, a ranking senator. If it's a rumor, it's a rumor. If it is not factual, it is not factual. And so I wouldn't want, like Kike has said, I wouldn't want to be thrown a bone at and then you keep me busy discussing the bone. The budget that was passed included a budget for recurrent expenditure, which is 9.92 trillion. And then 8.25 trillion for debt servicing. And I remember a lot of people shouted foul then that why would you be spending almost the amount that you're spending for capital expenditure to service your debt? And then capital expenditure is 8.7 trillion. If you put all of this together, you arrive at the budget of 28.7 trillion. So I do not know where Senator Ningi got his a budget of 25 trillion from. That's first and foremost flawed. Secondly, the fact that the National Assembly, adds to the budget, the court had ruled that the National Assembly is not a rubber stamp and that they have the power to add or remove projects from the budget that they think are necessary and important. So to that extent, like when the issue of budget padding started, when a former House of Rep member, a chairman House Committee on Finance, accused the House of Rep of padding the budget, that was his word then, and the court ruled that they have the power to add or remove from the budget, that they are not a rubber stamp. You cannot just throw a document at them and ask them to just rubber stamp it and bring it back to you. So that laid the issue of budget padding to rest. But on the allegation of the budget passed or the budget being implemented is different from a budget that was passed, the senator, they say he who are alleged must prove. The senator has not been able to put material facts before the public to enable me say truly, indeed, there is a discrepancy between the budget passed and the budget being implemented.
All right, Liberals Oshoma, we might just pen this matter here because, of course, there's a tentative response allegedly by the Senate President, Godswill Akpabio, saying that he does not know how that came to be, that the deficit in what that's the allegation being brought forward by the Senate member there, saying that he does not know how that amount came to be, that probably it was added while he was in hospital. So this case that we'll need to revisit to look at all the facts, look at all the figures and come out with what is evidenced and a truth so that we can present it to the public. Liberal Oshoma, Kikelomo, Shodeko, thank you so much for sharing your insights with us on the show.
My pleasure. My pleasure.
Thank you. Pleasure's mine.
We're now going on a short break. Even as we wrap up on the show this morning, we will do a quick break right here. And when we return, we'll look at the remaining areas. Well, despite the U.S. imposing sanctions on Zimbabwean President Emmerson Mnangagwa and other officials over alleged election abuses, Finance Minister Mthuli Nkubi assured that debt restructuring talks led by the African Development Bank President Akinwumi Adesina and former Mozambican leader Joaquim Chissano are progressing. Now, the U.S. paused its involvement in the discussions, but Nkubi emphasizes that the dialogue will continue. This morning, we're joined from Harare, Zimbabwe, by a developmental economist, Dr. Prosper Chitambara. Dr. Chitambara, it's nice to have you around.
Thank you so much for having me.
So we see the Finance Minister Nkubi talking about progression in terms of debt restructuring talks. I'd like you to just, in about a minute or two, look at the specific steps that are being taken that you feel will go a long way in resolving the debt issue for the country.
Yeah, no, thank you so much. No, I think first and foremost, the establishment of the structured dialogue platform itself, I think that's a major success. But it's actually bringing together all the key stakeholders in terms of the debt processes in the country to the table. And they already have actually agreed on the steps that must actually be taken in terms of the reform agenda. We have seen as part of that reform agenda, the International Monetary Fund was actually in town as part of the Article 4 consultations. And there is agreement between the government and the National Monetary Fund on a staff monitored program. So the government of Zimbabwe will be entering into a staff monitored program with the National Monetary Fund, where we will agree on macroeconomic reforms that will need to be implemented over a period of time, obviously with technical assistance from the International Monetary Fund. So for me, I think that's a major success. That's a major step forward. But I think now what's most important is to ensure that we move with speed. We expedite the implementation of not just the macroeconomic reforms, but also other governance and the institutional reforms that government has already agreed to implement. Because as we move along in terms of implementation of those reforms, that helps to ensure that the economy is able to grow more sustainably and thus be able to generate incomes and revenues to be able to defray the debt.
We also see the finance minister talking about ongoing token payments, and people are talking about how long Zimbabwe realistically can continue these payments while facing such huge debt and arrears. And there's also the concern if the country might risk a default if a restructuring deal isn't reached soon. So what's your take?
Yes, we have been making some token payments, but given the extent of the debt, it's not going to help us. So I think the most important thing is to ensure that we are able to get our economy to grow more sustainably. Was it the current growth rates? Again, it will be difficult to sustainably address the debt issue. Yes, some restructuring could actually help us, but what restructuring essentially does is that it just postpones the payment of the debt, or it postpones the debt burden. So it doesn't sustainably address the debt problem. So I think we need, for me, the best way is for us to make sure that we implement institutional reforms to unlock the full potential of the economy, to ensure there is greater inflows of capital and investment into the economy, and to ensure that the economy at least is growing at a fast pace. The economy is growing more sustainably. If we're able to grow at least by at least 7% for the next 3 or 4 years, I think that will go a long way in terms of ensuring that we grow the economy and we create adequate revenues to be able to pay back the debt without having to incur further debts.
Well, you sound very optimistic about these debt restructuring talks, but then we see the U.S. pulling out of the deal, which is also a major, it has a major stake in these particular talks, and it cited some democratic reforms that were being violated or were not being put to the letter by the president. Now, don't you think that would have a negative effect on what the Zimbabwean government is trying to achieve in terms of offsetting its debts?
Definitely, you're actually right. It will affect our pace and our progress. We are given the fact that the United States, one of the key stakeholders within the major multilateral financial institutions. So I think the onus is really on the government to implement the governance reforms that address some of the deficits that the US has raised, and also other institutional reforms to ensure that there are no major encumbrances militating against faster and more inclusive and sustained growth within the economy. So I think it's ultimately on us in terms of how soon we're actually able to come out of this debt challenges. So it's really us that will make the process and the outcome successful. Yes, the outside, the external interlocutors are actually there to offer support, but ultimately the burden and the responsibility must be on us to implement the reforms that ensure that whether it's the political space is conducive for businesses, and also the macroeconomic environment itself is conducive for investment inflows.
All right, Dr. Prosper Chitambara, developmental economist, thank you so much for your time.
Thanks for having me.
And that's it on today's edition of Business Edge. Don't forget that you can visit our social media handles at News Central TV. Visit our website www.newscentral.africa, and equally download our mobile app on App Store and Play Store. Until next time, I am Lekon Obanjo.